Welcome, everyone. My name is Carol Martino, and I am a member of the McKenzie Foundation Community Relations. And I'll be serving as a moderator for today's event and today's town hall. We are holding these events just for you, our friends, our supporters of McKenzie, and we are so glad to have you here with us. Today we have 4 panelists: Billi Jo Hennika, Chief Operating Officer, McKenzie Health Systems; Michael and Susan Dreyer of Dreyer and Dreyer, LLC; Eldon Preston of Michigan Works. Before we begin, I'd like to cover a few housekeeping items. Your audio will be automatically muted. Use the question and answer function at the bottom of the screen to ask a question. Do not use the chat. The town hall will be recorded and a link will be sent to you in a follow-up email. The topics for today's agenda will be updates on our community. That will be given by Billi Jo. Year-end tax and paycheck protection program for COVID. Susan and Michael Dreyer will cover that. And the workforce engagement and retooling for COVID will be covered by Eldon Preston. Followed by our speakers, we'll have a question and answer time, which you will be able to submit your questions. At this time, I'd like to turn it over to Billi Jo Hennika for our update, and she will tag team Susan and Michael Dreyer, and then they will bring on Eldon afterwards, and then we'll follow with questions. Billi Jo, I'm turning it to you now.
Thank you, Carol. I certainly want to thank all those who are participating in today's town hall. We have a great lineup of speakers, as Carol had mentioned, from our local community. As Carol also mentioned, I'm the Chief Operating Officer at McKenzie Health System, and part of my role is working with the community, including businesses, to work towards improving the health of our community. Our vision at McKenzie is to improve the quality of life in our community through an integrated healthcare system that's characterized by collaboration, innovation, technology, and value. We know quality of life is determined by each individual. Within the arena of healthcare, quality of life is viewed as a multidimensional, encompassing emotional, physical, material, and social well-being. McKenzie has taken a very active role in the health of the community by implementing a multitude of services and programs. All of those services and programs are available on our website, but we also recognize in this that there's a lot of other areas that are important as it relates to the quality of one's life. When we don't have the expertise internally to provide the education that's needed, we partner with those within our community, such as those speakers that we have on our agenda today. It is recognized that the stress of COVID-19, the financial hardships, as well as the many unknown answers to programs established due to COVID-19 has taken an extreme toll on us mentally. In today's town hall, we have brought to you these experts from our community to help close some of those gaps and questions that you have. Prior to turning it over, I would like to give a brief update in regards to COVID-19 in our county. Sanilac County is currently reporting upwards of 800 cases. That's of yesterday's numbers. And we know that all of those do not get reported directly to MDHHS as quickly as they should. So we're really looking more towards just under 900 cases of yesterday and 17 deaths. Over the last few weeks, we know that these numbers have tremendously jumped within our community as it relates to positive cases as well as percentage of positive cases. McKenzie does continue to offer all of our services, both from a hospital perspective as well as our clinics. You'll find that the clinics are offering you televisits, which will prevent you from coming into the office, as well as the hospital can provide testing, all filtered through your primary care provider, as it does require an order to do that. We do require screening for all of our patients, and of course, that's for the safety of everyone within the community. Our employees are screened daily prior to starting their shift, again, for the safety of everyone. So it's very important as we see these numbers highly penetrating our community that everyone does their part. We need to continue to mask. We need to continue to keep our 6-foot distance whenever possible. Practice good hand hygiene, be respectful of one another. And with that, I will go ahead and turn it over to Michael Dreyer, who's a CPA for Dreyer and Dreyer, and he's going to talk about year-end taxes and payroll protection. Mike?
Okay, thanks, Billi Jo. Susan and I are going to talk about everybody's favorite subject, taxes, and we're going to kind of break it down into two different areas. I'm going to start with kind of the individual side. She's going to talk a little bit more on the business side of things. So a couple of changes that happened in 2020 was obviously the the Coronavirus Aid, Relief, and Economic Securities Act, or the CARES Act, was implemented. And we're just going to go through a few of the items in that probably will have an impact on just about everybody. The first one and the big one is everybody probably received a stimulus payment, or what they call an EIP, or economic impact payment. Most people got probably close to the $1,200. And if you had any qualifying children under 17, you got $500 for each one of those. This stimulus payment is not taxable income to you. On your 2020 tax return, there will be a refundable credit where you'll have to show how much you received, but it will not be taxable to you. If you did not receive the entire $1,200, you may be able to receive a little bit of it or bring it up to the $1,200 on your 2020 return. Also, if you received more than what you should have based on your 2020 income level, you will not have to repay that amount. There's some income limitations that determine how much you were receiving. Also, and this is kind of just a side note, if anybody was affiliated with a deceased taxpayer and they did get a stimulus check, whether you're the spouse or maybe a trustee or a personal representative of an estate, they have to return that check to the government. I believe they sent out about 60,000 of those checks that were sent to deceased taxpayers. Another item that's new for this year is you will be able to, if you do not itemize, if you do the standard deduction, which about 90% of the taxpayers do, you will be able to take a $300 qualified charitable deduction. You must prove, though, that you paid this. You can't just put $300 down as a deduction. It has to be either cash or check. You can't donate clothing or anything like that in order to be able to get that $300 deduction. Another thing is they waived the required minimum distributions for 2020. So you're not required to pull out any funds from your retirement account in 2020. You can if you want to, but you're not required to. Another item that they implemented was what they call the coronavirus related distribution. This is an amount that you could take from a qualified retirement plan, and it could be up to $100,000 with no 10% penalty, and you can include that income over a 3-year period. You could also pay it back within 3 years and have no income effect. But in order to qualify for it, the coronavirus related means you, a spouse or a dependent, had to be diagnosed with COVID-19 or experience some kind of adverse financial consequences like being quarantined or laid off or reduced hours. So if that happens, it is potential that you could be able to take some of that money. But again, you may have to prove that in order to qualify for that. Another item, this kind of pertains to businesses, is NOLs, or net operating losses, from 2018, 19, and 2020. You can carry those back at 100% of your taxable income. They had changed the rules in 2018 where you can only carry it back to 80%, but they basically reinstated it and said you can carry it back 5 years now at 100%. So there might be some situations where amending some returns make some sense. A couple of general topics. All that unemployment that people receive, that's going to be all taxable income to them. So hopefully, if you received some unemployment, you were taking withholding out on it, withholding taxes. They changed the required minimum distribution age from 70 and a half to 72. So you can delay taking out your funds for a little bit longer time period. They also changed that there is no age limitation now on making contributions to IRAs. Previously, it was 70 and a half, but you still have to have earned income in order to be eligible to make a IRA contribution. So you have to have W-2, or if you're a business farm, you could be able to contribute. A couple of people may not, or may have seen some small amounts going into their checking account. The IRS actually paid some interest on the 2019 tax returns if they were filed between April 15th and July 15th. The IRS is required by law to pay interest on any refunds paid over a 45-day period on any timely filed returns. So that may create some interest for some people. The average interest payment was only $18, so we're not talking big dollars here, but they did pay it to 13.9 million taxpayers. Now, on the negative side of that, that interest that you receive from the IRS is going to be taxable to you, so you'll have to show that on your 2020 tax return, and you'll get a 1099 INT to show that. Another Secures Act, this actually goes back into 2019. The Setting Every Community Up for Retirement Enhancement Act changed how the beneficiaries receiving money from IRAs, how they have to distribute that. It has to be now over a maximum of a 10-year period. Previously, beneficiaries could extend it over their lifetime, which could be significantly longer than a 10-year period. There are some exceptions to that, though. A surviving spouse, a minor up to age 18, if you're disabled or chronically ill, or if you're an individual that's not more than 10 years younger than the IRA owner, they can still follow the old rules of being able to stretch that IRA. There's a new 1099 out this year. It's called a 1099 NEC. In the past, any non-employee compensation, you would report that on a 1099 miscellaneous. But in 2020, they've created this new 1099 NEC. Everything else on the 1099 miscellaneous will stay the same. They just remove the non-employee compensation and move that to a new one. So a couple of things to think about for 2020 and beyond. If you had lower income this year, it might be a year to consider shifting some of your traditional IRA over to a Roth IRA. Roth IRAs are a pretty good investment item to take a look at. Obviously, with a new president, they always make changes. There's probably going to be some tax changes coming in 2021 or 2022. Probably higher tax rates than we currently have. But he did mention that he wasn't going to increase taxes on anybody of $400,000 or less in income. But just kind of reviewing what he's talked about, I see a few cases where that may not be necessarily true. Also, people who have earned income credits in 2020 may be affected by all that unemployment that they received, because if you have lower wages and higher unemployment, you're going to have less earned income, which may reduce that earned income tax credit. Also, taxpayers who if you have a required minimum distribution, you can take that directly or give that directly to a charity. You can do that up to $100,000. It will not be included as income to you, but you do not receive a charitable deduction for it. But that's only if you don't itemize. That's just a way of helping somebody on the Michigan side save some money. And lastly, farmers can give gifts of grain to charity and receive a tax benefit for you. I know McKenzie, there's a pamphlet right here that talks about giving grain to charitable organizations, and McKenzie is one that obviously you could do that with. So if anybody's interested in that, we've got some brochures that we could pass out and kind of walk you through that process. So that's everything I have. I'm going to now pass it over to Susan, and she'll continue with the tax section.
So I'm going to talk about some business credits, things like that are available. One of the things, a lot of them are payroll related, so we'll start with those. There is a provision in the CARES Act that allows you to delay the payment of some of the employment taxes. So you can, as an employer, not withhold the Social Security taxes from your employees for the period of March 28th through January 1. You delay the payment of those taxes then until the employer share of those taxes would be paid at 50% in 21 and 50% in 22. But the employee share has to be paid kind of in equal payments between January and April 30th of 2021. The kicker with that is, though, that if the employee leaves your employment before that is all repaid, then the burden falls to the employer. So the employer would pay the tax and then create a W-2 for that employee in 2021 for the amount that they paid on their behalf. So we have not recommended that for a lot of our clients, just because this is a delay in taxes. And if you can't afford to pay them now, the chances of you being able to pay twice the taxes next year are probably slimmer as well. So I'm not sure it's a great idea, but it is out there. In some cases, it might be a great idea. The other thing is that employers that have less than 500 employees are required to provide 2 weeks of sick leave and up to 10 weeks of family leave if for anyone who has either a family member homesick or to do childcare for when the schools are closed. So there is a credit out there for those employers that will you can take that would you get reimbursed for 100% of the cost of the employee's pay and the related proportion of their medical insurance and the Medicare taxes for that time period that they're off. That credit you take on your 941 or your 943 form. And any employers that have less than 50 employees don't have to do that, but they can opt in if they would like to. There is one other credit that is for employers who were shut down and continued to pay their employees. So instead of laying them off and letting them collect unemployment, they continue to pay them. This credit would give you a credit for up to $5,000 per employee based on 50% of their wages. But it cannot be taken if you already got a PPP loan. So there aren't very many people who will qualify for that, but it's out there and may help somebody. So the other thing that the CARES Act did was establish these PPP loans. And for anybody who doesn't know, those were loans that are SBA backed that were facilitated by banks. So you applied through your bank to help cover costs during the slowdown or the shutdown. So you can have these loans completely forgiven if at least 60% of those funds were used for payroll and the remaining 40% was used for mortgage interest, rent, utilities, things like that. You can use, obviously you could spend the entire amount on payroll, but at least 60% had to be payroll. You have 10 months from the date of the loan to apply for forgiveness, and it can take up to 5 months for that to get a response to your application for forgiveness. You can also apply later. You have up till the due date of your loan, which is 5 years from the date you received it, but you would be making payments on the loan if you wait for longer than the 10 months to apply. So your covered period is defined as the amount of time that you have to spend those expenses. And if you received your loan before June 8th, you can choose a coverage period of either 8 weeks or 24 weeks. If you got your loan after June 8th, then you must choose the 24-week coverage period. Advantages of that 24-week period are that you would have more payroll. So obviously you may not need to document your mortgage interest, your lease, your utility bills, all those things, if you can spend all of your money on payroll. And I think that would speed up your process for forgiveness because there'd be less information for them to weed through. The other thing is that if you're self-employed and you file on a Schedule C or you get a K-1 from a partnership, the maximum that you can receive on this PPP loans is 2.5 months of your income from 2019, either on your K-1 or your Schedule C. If your income on those was over 100,000, then you're capped at 15,385 if you use an 8-week period, but you're capped at 20,833 if you use a 24-week period. So obviously the 24 weeks would be better if you're self-employed. So let's talk about the covered expenses a little bit. So you have a couple of choices to pick your covered period. You can choose it to start on the date that your money was deposited into your bank account, or you can choose the first full day of the first payroll after your deposit date. And that may not seem like it makes a big difference, but if you're one of those people who laid off all of your employees and then brought them back after you got your loan proceeds and it took a couple of weeks for that to happen, delaying that start date of your covered period is a good thing. And any payroll that's paid before or that's paid during that covered period is obviously some of your covered expenses, but also pay that is earned during your covered period and paid right after, that is also part of your covered expenses. So that's a good thing and helps you meet that 60% payroll requirement. If you're going to use, if your payroll doesn't use up your entire loan and you're going to use mortgage interest, rent, utilities, phone, internet, all those kind of things, you have to be able to provide a mortgage interest statement from the bank showing the interest that was paid, a lease for your rent, as well as proof that you paid the payments, utility bills, your phone bills, your internet bills, all those kind of things. And those will have to be supported when you apply for your forgiveness. If you rent from yourself, so a lot of businesses have an operating company and then a rental company, you rent from yourself, that rent does not count, but you could use the interest on the building that you're renting if it's in your name or the ownership is the same as the operating company. You also cannot use any expenses that are for an office and home if you're self-employed and you work from your home. The other thing that the PPP loan requires is that you do not cut your employees' pay by more than 25%, and that you do not cut the number of employees that you have during that time. So there's a number of different ways that the 25% in pay is pretty easy to process. You can just show what were they making before and what were they making after. But the full-time equivalent employees can be a little bit more complicated, and there are so many ways that you can calculate that. But what we found is the simplest is probably the best. If you take your total hours worked and don't include the overtime hours, you divide that by the number of people you have working and divide that by 40, which is the 40 hours a week. And your salaried employees are all deemed to have worked 40 hours, regardless of how many they actually work. And you can also add back into your FTEs anybody who had to leave because their kids were home and they couldn't work anymore, who left because they had someone at home who had some health issues that they couldn't subject them to somebody who was out working in retail, let's say. So you can add those people back in if you couldn't replace them and they wouldn't come back, and that you did not reduce their position. So then there are three different forms that you can fill out when you are applying for forgiveness. So anybody that has under a $50,000 loan can use the 3508S form. Right now, it appears as if they're going to require no documentation, although we've talked to a number of different banks who still want you to provide a payroll summary and your quarterly 941s and Michigan unemployment forms. So that's what we're kind of recommending for our clients, is to just submit them. Better to send too much than not enough. But there's definitely no need to show your calculations for what you paid your employees or what those full-time equivalent calculations are. But every bank seems to have a new idea, and really a lot of these rules are still up in the air. We're waiting for Congress to act and for banks and the SBA to make final decisions. So if you're under 50,000, you use that 3508S. If you are over 50,000, for employers who did not reduce the pay rates, or for people who receive less than $2 million in their loan, they can use or apply for forgiveness on a form 3508EZ. This is also for businesses who paid employees who did not work. And you must, and with this application, you do need to calculate your FTEs, and you do need to calculate that you didn't, or show a calculation that you didn't reduce anybody's pay by more than 25%, but you can keep it in your records in case they ask for it. They are not asking you to submit that. You are required to keep all of these records for 6 years. You would need to submit a payroll summary for your base period. They want to compare what are you paying your people now with what did you pay them previously. They're recommending the base period be January 1 through March 31st, but you can also use February 15th through June 30th of 2019, which is odd, I know, but that if it works and helps you get to 60% or to keep your rates up, then just know that that's out there. You would want to submit a payroll summary, bank statements that show your paychecks clearing and your other expenses clearing the bank. Your 941 forms and your Michigan unemployment forms would need to go in, and possibly W-2s from the prior year. That's still being decided. At this moment, we are still hearing that this possible Congress will forgive all loans under 150,000 so that they would go back to using that S form. So anybody who got between 50 and 150,000, you may want to hold because it may get simpler later. It may not, but it might. If you are using other expenses, mortgage interest, all those things, like I said, you would have to submit all the statements, all the bank statements showing that they were actually where those checks cleared, all those kind of things, as well as all that other information for payroll. The third option is for people who actually did cut pay by more than 25%, or their FTEs were reduced, or their loan was over 2 million. This one is you would submit everything we've already talked about, plus your calculations that show those reductions. And then know that a part of your loan will not be forgiven, and it's proportional to what percent you spend on payroll and those reductions in cost and things like that. The other thing that is important to know about your PPP loan is that there are some consequences. While the loan itself is not taxable to you, what they're telling us is that the expenses that you use to pay them will also not be deductible, which in my mind makes that loan taxable. So if you receive 50,000 in loan proceeds, but we have to reduce your expenses by $50,000, you're going to have $50,000 more in income this year than you would have had last year on that same thing. That is also, I know there are people who are still out there fighting it. It's possible that that could be waived. We aren't going to know that probably till midway through 21. And so your tax planning needs to be on the assumption that you're going to reduce your expenses for anything you used that PPP loan to pay for. If you're self-employed, your pay that you get to keep out of your PPP loan is not something you normally deduct. So there's no deductions to reduce your taxes by. So that money is free money to you if you're self-employed. It's just the money you've spent on your employees and your mortgage interest, rent, those kind of things that will affect your taxes. Know that if the loan is not forgiven, the interest rate is 1%. You have 5 years to repay. So it really is a good way. You're not going to get cheaper financing anyway, even if it's not all forgiven. I think that that's really everything you need to know, except that, so many things are still changing on PPP loans that this could change still tomorrow. And we're recommending that everybody under 50,000 just apply now and be done with it, because it's not going to get much simpler than that. If you're between 50 and 150, I think you can weigh in, could go either way. So apply now, maybe apply later. I don't know. And I think that that's all that I have. So I will turn it over to Eldon.
All right, thank you very much for the opportunity to be here. My name is Eldon Preston. I'm the business services representative with Michigan Works for Sanilac County. And I've worked within the 4 counties within the thumb, but currently I'm with Sanilac County. And our current name is GST Michigan Works, which stands for Genesee Shiawassee Thumb. And Governor Snyder instituted a consolidation, and we were consolidated with Genesee and Shiawassee County. We were formerly known as Thumb Works. And so when the consolidation happened, that's how we became GST Michigan Works. So if you've wondered, why does that say GST? What does that mean? That's what that means. And really what we're about and what we're here for, we're about people. We're about the people that make up your organizations. That includes the owners, the management, and all the people that you hire, your workforce, and then also the people that are in the community that are looking for work. That have needs, that they need assistance with anything from as simple as, I haven't built a resume together in 20 years. How do I do a good resume? Something as simple as that to something as in depth as helping them retool their, I want to make a whole career change. I got laid off. I'm sick of this, getting laid off. I need to make a career change. And working with them and helping them retool their career, getting them grant funding to help with making those changes and come alongside. But my role in business services is to take a similar role with any organization that employs people. It can be a private business, it can be a nonprofit, any governmental units, anybody that employs people, and to work work with, helping you find the best people, helping you to figure out ways or places that you maybe need to provide some training to upskill your people, and then search out and find some grant funding to help you do that, and in different ways that we can come alongside to help. And that's what we're here for, is to come alongside and help any way we can, the businesses and the job seekers. And you know, when Nina asked me to talk a little bit about, you know, as a business, you know, how do we get through this adversity right now with COVID and come out the other side and come out better for it? How do we do that? You know, and I thought about, you know, there's all sorts of different things I get. I'm on email lists where I see all these, you know, suggestions of using all these different things like, you know, Zoom and Yammer and Microsoft Teams and all these different things. Oh, you could do this, you could do that. But really, you know, I come back to our original, when I started, I've been with them, I'm halfway through my 20th year, so almost 20 years serving the community. And I started out, I don't know if any of you know Dr. Marv Pickla, but he was a director when I started. He has retired, you know, 5-6 years ago. But I learned a lot from him, and he was a very visionary leader, fantastic in that, but he always remembered, go back to the basics, especially if there was a time of a little bit of struggle or a time of stress. First thing you do is go back to the basics. Shore up your foundation, make sure your foundation is strong, and then you get back. Once you're sure that your foundation is strong, you get back to the innovation, and that's kind of the icing on the cake. And so I want to kind of do a little bit of an object lesson real quick. Everybody see what I'm holding up? What am I holding up? Holding up a coin. Doesn't matter what kind of a coin it is, but we all know that coin has heads and tails, right? There's two sides. Can any of us here separate the heads from the tails? I know I can't. I don't think any of us here would be able to separate those layers and separate the heads from the tails. And you might wonder why am I even bringing that up? Because this can represent a point of adversity. When we have adversity in our life, adversity in our business, just like this coin has heads and tails, with an adversity, there is always an opportunity attached to it. And you may have to search for it. You may have to dig for it. It may not be easy to find that opportunity, but I can just about guarantee you, in any adversity, any difficult situation, if you put enough effort into it, you can find an opportunity in that to turn that around, to make something good come of that. And that is the talent that entrepreneurs have. The ones that end up being billionaires, it's because they are expert. Their vision is like radar that can zoom anything that there's a need or opportunity. They can see the opportunity in that and capitalize on that. So the reason I'm bringing that up is, yes, we may have some difficult, you know, times with this, and it may be challenging, you know, for business, but stay positive. There is opportunity in that, but you need to look for it. And really, and this is a universal truth. I'm not going to focus on too much on all the little external things. You know, I'm going to focus on getting back to the basics, getting back to that foundation, making sure your foundation is strong so that you can add some innovation on top of it, but have that strong foundation so that you can grow, you can build. And when we all get through this, we'll come out on the other side, better, stronger, faster, and more productive, more profitable, you know, depending on what your situation is. And so, you know, there's three different things that I want to touch on. But first of all, when you start implementing the three things that we'll get into, the first and most important thing is you have to lead by example. As an owner, as a CEO, as whatever type of leadership role that you are, you need to lead by example. And you need to have some radical honesty, really. Because sometimes it's real easy for us to look at others and say, well, you need to change this, you need to change that. But we need to look at ourselves first. As a leader, the things that we are going to suggest or implement through our organization, that we're going to do these changes, we have to be on board with it with ourselves. If there's an attitude that we need to change ourselves before we ask someone else to do differently, you got to be radically honest with yourself and be willing to make those adjustments within yourself, because people will follow, they will emulate what you do. If what you say and what you do don't match, they're going to follow what you do, no matter what you say. And so first thing, be radically honest. Don't try to deflect or place blame on somebody else or look for someone else to point the finger to. If there's attitudes that need to change to get the foundation where it needs to be, to get that foundation strong, the leader is the cornerstone of the foundation. And so your cornerstone needs to be solid. Be honest with yourself. Are there some things, that attitudes that I need to change before I ask others to do the same thing? And so the thing I want to start with, the first thing that I would suggest, eliminate divisiveness. I know we've all seen it in the community, right? And especially in a time like this with COVID, it really brings out the divisiveness. You know, we look at someone, there's a whole wide spectrum of feelings and opinions on, you know, what's going on, what should be done. But those difference of opinions are not wrong. You know, there is some basis, that whole spectrum from wherever you're at, there is they have a basis for those feelings. And if you're a business owner and it runs the risk of putting your business out of business, you know, that feeling of not wanting to see your life's work go down the tubes, you know, that's not wrong. Or the very opposite feeling of you need to do everything no matter what, and if it closes a business down, so be it. The most important thing is that people are safe. That's not wrong either. And so the thing that we need to do is we need to have grace for each other. We need to be respectful of each other's opinion. And so what you need to do is implement all the safety measures consistently, do it correctly, follow the rules, but do it in such a way that makes everyone feel that their feelings are valued. Don't make anyone feel like they're being put down. Eliminate the eye roll. You know, I know we've probably all been on the receiving end of, you know, somebody disagrees with us and we get the eye roll. Or maybe we're tempted, maybe we've done it to somebody else. We give them the eye roll. What's the attitude behind an eye roll? And so here's where we're getting into the radical self-honesty. We need to eliminate the attitude. It's not about the eye roll, it's about the attitude that's behind it. Do not devaluate others' opinions. Do not devaluate because they disagree with me that that has no value. They're just wrong. No, they're not. And so that's an area that needs to be led by example. And so as a leader, you know, implement that change within yourself. If you have a tendency to be the one that, you know, if you disagree with somebody, you just give the eye roll and you just dismiss, how could they be so stupid, you know, type of thing. In your own mind, whoa, stop. I'm not going that way anymore. I'm not going to do that. I'm going to respect other people's, but then once you've implemented that within yourself, then you make sure you communicate that down through the organization. You see people that are getting into arguments about, you know, I don't think, you know, this isn't right, that isn't right. You stop it. You know, wait a minute. No, we don't do that here. We respect each other's opinions. And so, but when you administer those safety measures consistently and transparently, and value everybody's opinion on if they like it or not, if they think it's necessary, if they think it's overkill, whatever, that you don't allow the divisiveness over that, then you can get past it. You can avoid creating divisions within the organization based on the response to it. And in the ones that think it's overkill, just gently, explain to them that, yeah, you might think this is overkill, but we're following the guidelines. We're doing this consistently, and there are a lot of people that don't think it's overkill. So we're going to respect them as well. And so don't, or depending on where you're on the spectrum, don't just dismiss somebody. Make sure everyone feels that their opinion is okay. We're going to do the right thing. We're going to follow the rules, but agree or disagree, that's okay. And we're going to go through this together. See, here's the thing. In times of adversity, you got to pull together. You have to have unity if you're going to get through times of diversity. So not just in general, work towards eliminating attitudes where people get divisive with each other, where people will get angry because I disagree with somebody and why they're just wrong, and lead that example as a leader, and then promote others that work for you, your other leadership staff that are under you, coach them, promote them that, we don't do that in this organization. We treat everybody with respect. Everybody's opinion has value. Everybody's feeling has merit. And we're going to do this together. We're going to pull together. We're not going to divide. We're going to pull together. And so that's number one. And then, number two is in times like this, as a leader, you need to exhibit some understanding and flexibility. When times are real easy, when things are going smooth, things are smooth as silk, it's real easy to get dogmatic and to get real rigid and be like, nope, this is our, you missed 2 days in a row, you're out. In times like this, it forces us to look at being, wait a minute, life happens. People have lives, they have kids that get sick. They have kids that their school got shut down, so they're at home. And so you need to be flexible, be understanding, understand that life happens, and work with people. If it's being willing to make some adjustments in schedules, do some flexibility, maybe change some things, with sick day policies, work from home, policies, all those type of things. Be flexible and understand. Don't be judgmental of people when life happens. Work through it. Work through them as best as you can. Coach them. If you see patterns that that are unacceptable, coach them through that. But don't be rigid and dogmatic right off the bat, because we're all in a situation where life is completely different than what it used to be. And so have that flexibility, but then as you do that, use it as a study. As you do these things, as you're trying things, innovative things with scheduling, with working from home, with maybe giving people some different flexibility with days off, things like that. Track that. See, okay, we did a working from home. How did that affect our productivity? Did our productivity stay the same? Did it go up or did it go down? How are people's morale? Do they have better morale when they have the flexibility of being able to work from home at times? So use it as a learning opportunity for the future. So if you find out that, people did like that flexibility, and guess what? They were more productive. So use it as an opportunity to learn something. It's, when things go back to where COVID is done, maybe that's something we should start implementing. Maybe that's one of those opportunities that were on the other side of the coin. See, when things are going real easy and real smooth, old adage, if it's not broke, don't fix it. A lot of times we don't necessarily see those opportunities because we don't have to. And so learn from those things. If you find some things that, we tried this to be flexible and, it really worked out well. If it's good, keep on doing it after that. Use it as a learning experience and grow from it and develop as a business. And the third thing, there was an article that I read in Harvard Business Review. It's probably been over a decade now, but Harvard did a study of why people quit companies. They did a study on that, and they did a root cause analysis of why companies have turnover and why they quit, why they leave. And what they found out was it all boiled down, the root cause was that people quit because they feel that you don't value them. Everything boils down to that. You don't value me. And if you take it to the most basic, compensation levels. If people feel that, the compensation level was too low, the cause of that is you're not paying, you're paying me too low because you don't value who I am. You don't value the value of what I'm doing for your company. And so, value your people. Make that something that permeates through the whole organization, that we value the people in our organization. And I prefer the term human capital over human resource, because capital is an investment. Capital is something you invest in, you try to make it grow. In a business, when things like purchasing a building, expanding a building, putting in new machinery, new equipment in the hospital, that's called a capital investment. That's considered an investment into the future. A resource is something that you use up and discard. A resource is something like, you've got a fleet of trucks and, those trucks run on diesel fuel. You have, big tanks full of diesel fuel to fuel your trucks. And as you burn it, you burn that out and you replace it with more fuel later. That's a resource. You burn it up, you use it.
Eldon,
Yes, I'm going too long.
we need to start opening up for questions now.
Okay, sorry, I'm going too
I'd like
long.
At this time
Oh,
to reiterate that use the question and answer function. Do not use the chat. And we're going to open it up for panelists to answer some questions. I have some. Billi Jo, first to you. If I want to start a wellness program for my employees, is there something McKenzie can help with? Or if there's not, is there a resource you can recommend to us?
Yeah, certainly. McKenzie works with a lot of different organizations and looking at what a good fit for a wellness program would be based on the needs of what type of business that you have. So feel free to reach out to me. I'd be happy to have that conversation and we can work through how we meet your needs for your employees. There's lots of different options out there.
Thank you. I have one for either Mike or Susan. Do PPP loans cover paid sick leave?
So any payroll during your covered period would be covered by your PPP loan. So, so I guess my answer to that would be yes. If you had employees that were home on paid sick leave during your covered period and you paid them anyway, then your PPP loan can be used for those funds.
Okay, thank you. Are agriculture producers, farmers, ranchers eligible for the PPP loans?
Yeah, that's definitely yes. It depends on, obviously if you have employees, if you reported income last year, if you're self-employed, there are a number of other factors, but yes, just because you're a rancher does not exclude you from that. So they definitely would have been eligible.
Okay, thank you. For Eldon, when do I send my staff home?
Well, you send them home. What the MIOSHA guideline is, and your best resource is MIOSHA. They have a lot of resources if you go to their website. But if they're exhibiting any signs of COVID, you should send them home. If you can't send them home immediately, make sure that you are able to put them in an area of your organization where they can be separated from people until they can go home. But you know, and it's kind of, again, it goes back to that respect for others. If people are sick, don't come into work, you know. But you should always be following the guidelines of checking the temperature, you know, when they come in and doing the log. If their temperature is over 100 degrees, roughly, that would be a point when you would send them home. If they're sick and they're exhibiting symptoms that line up with COVID, you would want to send them home.
Okay, I have a question for Mike or Susan. What do I do if I didn't receive the stimulus payment for my disabled dependent over 17 that lives with me?
I would have thought it probably depends on if you filed a tax return already for yourself, claiming them as a dependent.
Worst case, you should get one for them in 2020 on your 2020 tax return, because if you didn't receive it based on a prior year return, but you were eligible for it, that will show up on your 2020 return, and you should get it in your 2020 refund. So at this moment, I don't think there's anything you can do to get it right now, but when the 2020 return is filed, it should come then.
I have to unmute. Thank you for that. Eldon, what does the deep cleaning mean? And we've been cleaning the entire time?
Well, you know, deep cleaning, again, I don't want to present myself as a total expert on this stuff. I don't, you know, work for MIOSHA, but I have read a lot of their materials. Deep cleaning, if you think of it in terms of spring cleaning with your home. Deep cleaning, you know, your regular cleaning, you clean your high touch areas. That's the important thing. You know, you really want to focus on the high touch areas, doorknobs, counters where people might, patients or customers might come in and they may have to touch, you know, things. Telephones are really in one of the areas that you really need to be careful. But you need to use cleaners that, and I'm not an expert on specific ones, but cleaners that are medical grade that will disinfect for strong viruses or very serious viruses. That's your basic, your deep cleaning is you go across all your surfaces, your low touch, your high touch, everything that is a surface in the building, clean it with those disinfectants that will kill viruses. Kind of like spring cleaning, you know, you may want to have your carpet steam cleaned, those types of things. Really, it's basically just being extremely thorough. The areas that you normally don't get to, make sure everything is clean, make sure every surface is disinfected, not just the high touch areas. And that should be done periodically. I don't have a definitive, you know, you should do a deep cleaning every so often, but you know, consistently do your high touch, and then periodically all your surfaces, clean them with that. Maybe clean your carpets, you know, periodically.
Thank you. Billi Jo, do you have an estimated turnaround time for the COVID tests that are being done at McKenzie and other places in the county?
Yeah, it really does vary depending upon the volume. Each of the places do. At McKenzie, we're seeing, if we're doing a rapid respiratory panel on a patient, our goal is to have those turned around within 24 hours. Those that are sent out to the outside lab, we're seeing anywhere from 3 to 4 days. Of course, we've seen as long as 7 days and as short as 48 hours. Last that I was aware, the health department was really seeing that same turnaround time, anywhere from 2 days to 5 days. And again, that's depending on the volume of tests that they're doing.
Thank you. One for probably Susan. What if an eligible borrower contracts with a third-party payer, such as a payroll provider or professional employer organization, to process payroll and report payroll tax? Is that covered, I guess?
So yeah, so it's still your payroll. So it just may be a little harder to prove, the payment. So you would have to get payroll reports from your third-party provider, your 941s that they file for you, the Michigan unemployment that lists the employees, all those kind of things. And then you would have to provide proof that you made payments to that third-party provider to cover those costs. So, but yes, as far as I know, all of those should be included in your payroll costs.
Okay, I think this one's for Eldon. Are there grants currently available for retraining staff in a different area?
Yes, absolutely. There are. Now we're getting into the heart of what we do, what I do, and what my passion is really helping companies grow your workforce. Because like I said, I believe that as a huge investment. That's what your business is. And there's different ways that we can help. There is grant funding available for specific skill training, classroom training. And it's shorter term training, but there are a lot of providers that, similar to like Delta College Corporate Services, St. Clair Community College, Baker, Mott, Educated Business Resources Corporation, they all provide short-term training that is specifically for specific job skills. And we have some grant funding available to help companies, with that, for paying for their upskilling, their current workforce. We also have other something called on-the-job training contracts. And I should go back real quick. For that classroom training, has to be someone that's worked for you full-time for at least 6 months. Can't be somebody that's working for you through a temp service or somebody that you just hired a week ago. They have to have at least 6 months of history with you, so they're a good, solid, established, person with your company. The next thing is with new hires, if they're eligible for our funding, and there's a lot of different ways people can qualify, we can do something that's called on-the-job training contracts. And so what we can do to help with that is, we all know that there's that training period at first where people just aren't productive. They're not going to be, earning that full wage, the value, for that they need to be. And so what we would do is we would sit down and develop, okay, this is the things that I'm going to train these people and come up with a training plan. And then during that period, we would reimburse the company for half of those wages during that period to help offset that cost. And the cap on that, just for budgetary reasons, is $2,500 per person. We can't go over that. But it's a good way to help cover some of those costs of those trainings. We also have special grant funding for new apprenticeships. If any organization is doing actual US DOL registered apprenticeships, we have some funding where we can come alongside and assist with covering the cost for some of the on-the-job training and for some of the RTI, the required technical instruction, classroom training. And so we can assist with that as well. And apprenticeships is a great model. It's a good way to really build a highly skilled workforce, to have them, get credentials that are very valuable to you and to them.
It sounds like businesses should probably contact you directly if they have further questions.
Absolutely.
We have 1 minute left, and I would like to, at this time, thank our panelists for their time today, as well as each of you who have joined us to learn about these important topics. And this concludes today's webinar. Thank you for joining us. I appreciate all 4 of you providing your input. It was very valuable. Thank you.
Thank you.